want to thank you for taking time to view this demonstration. In the next few moments, I'm going to show you how you can use the Real Estate Analyzer spreadsheet to quickly and easily analyze any investment property. When you first open up the spreadsheet, you will be brought to what's called the Property Information page. This is where we input all the data that we have on the property to determine whether it's a good property or a bad property. This is what I want to demonstrate in the next few moments, and then once I input the data, I'll show you how we get our results quickly and easily. The first thing you'll notice on this page is that across the top of the page you have some yellow cells, and later on down the page you have some green cells. These yellow cells are where you input the data, and to do it, it's relatively easy. All you have to do is either click on the cell where you want to input the data, and when you do that, you'll notice a couple things. The first thing you'll notice is that it says enter property name. This enter property name just tells you what goes in the cell, and you can see as I move the mouse down from cell to cell, a little box pops up and tells you exactly what information you should be entering into those squares. Now, this is one way. You simply put your mouse on the cell, click on it, and then you can enter the data. The second way to do this is simply use your tab key on your computer and tab down from cell to cell to cell. As you do that, you will notice that a little box goes around each cell and you can enter the data. Now, I'm going to show you starting at the top on line 3 here by entering information. And I'm going to use a sample property, a single family home. And when I show you the numbers, please do not get hung up on the numbers because different markets have obviously different price points. I'm going to give you a simple demonstration just to show you how this would work. Okay, let's say that we're looking at a property that happens to be a single family, one-level home that contains 1,200 square feet. You'll notice that I'm entering the square footage into the line 3 for square footage. I'm going to tab down and enter the number of units, which is 1 because it's a single family home. Let's say the current value of the property compared to other properties that are similar in the area is for sale currently for $170,000. I'm going to enter the price, and then I'm going to move down and go to what I'm actually going to purchase it for. I'm going to try to negotiate and purchase this property for $165,000 and try to get it for at least $5,000 below its market value. I'm going to put that number in line 6 where it says purchase price. In this example, I'm going to put $30,000 down. So that would go into line 7 for my down payment. I'm going to expect that this property will appreciate over the next few years at, let's say, a modest 4%. Now you'll notice the next line, it says depreciation rate, and there's a number already entered in. This is for residential. This is the number that the IRS gives us whenever we depreciate a residential property. If this was a commercial property, we would use the other number located right here, 0.0246. We would just change that number. We are going to allocate the percentage of price that we're going to for the improvements, which in this case is 75%, and 5% is for personal property. Then we're going to move down here to the mortgage information. Now, since we're buying it for $165,000 and putting $30,000 down, that would mean that the balance of the first mortgage would be $130,000. Let's say that we are going to have it over 30 years, so we're going to amortize it over 30 years, so we're going to enter the number of months. And let's say that the interest rate on this property is going to be, 6.5%. Okay, we have now entered all the information, and you'll notice something. As soon as I entered the mortgage information, in the green boxes below, it gave me my monthly payment, my annual payment, and my total interest paid during the year. Now, this same process we would continue on down the page, and you'll notice I've already got the numbers entered here for the rental income, what we expect for vacancy. We've also got all the data here entered for the expenses on the property for the year. We've also entered our tax information below. Once we've entered all this information in here, which only takes us a few minutes, we can now analyze the property by simply and easily clicking to the very next page. Now, where do we click to the next page? You'll notice on the bottom down here below we have several tabs. The first tab, called Property Information, is this page where we enter the information. If we click on this tab, this will bring us to the first year summary of this property. I'm going to now do that. When I click on that tab, a second page comes up, and this information is automatically calculated. You can tell immediately by the green cells here. It's automatically calculated from the information that we put on the property information page. And this will show us quickly and easily what our 4 benefits of investing in real estate are. Those 4 benefits are, first one is cash flow before tax. It has already calculated all the numbers, but you'll notice in this property, line 18, where it says equals cash flow before tax, says negative 80.26. That means we have a negative cash flow of $80.26 for the year. Now, in a moment, I'll show you how we can change this and get this to be positive and show you what we would do. The second benefit that we have in this property is principal loan reduction, which means how much of the loan got paid off during the year. You'll notice it's green, which means it's a positive number, and we paid off $1,453.04. The third benefit is the taxable income savings, or the amount of tax we're going to have to pay. Now, this property, by analyzing the numbers, produced, if you notice on line 25, a negative taxable income of $4,583. What that means is that becomes a tax deduction to us. If we are in a 34% tax bracket, which is the assumption I used from the first property information input page, we are going to save in taxes approximately $1,558.46. Then below here it shows us the projected appreciation on the property based on our assumptions on page 1. Below that is our first year rate of return on our money of our $30,000 that we put down, and our first year rate of return without appreciation. The only difference between these two numbers on line 29 and line 30 is one includes appreciation, one does not include any appreciation at all. Then we also have something referred to as our capitalization rate, which again, if you put your mouse over the top, it kind of explains what it is. And although this is not showing it very clearly in this, let's see if we can just do this. It says it's the rate of return based on the price paid for the property. It is the net operating income divided by the price. And then we have what's called our cash-on-cash rate of return. And what this means is this is our actual cash that we've made on the cash we invested for that year. And you'll notice it says 0%. The reason it says 0% is because we had a negative cash flow, which meant we did not make any money on our initial investment. Now, let me go back and show you how we can quickly fix this. If I click back on the property information spreadsheet page, and I go and I say, let's see if we can raise the rent right here by $25. So I'm going to go $1,225. When I do that, I'm going to immediately go back to my first year's property information summary. And you'll notice now on line 18, which is my cash flow, I made $204.74. Therefore, I've now got some positive cash flow, but I had to raise the rent. Okay, I'm showing you pretty quickly here, but it gives you the idea of how this worksheet works. You can go back and forth from tab to tab to change information, and it immediately gives you the results. The next tab below here also shows you a 10-year financial, which is the same thing as the first year, except for we show it each and every year for 10 years. All of the same benefits. Then we have a 10-year chart showing you what your cash flow and benefits are over 10 years. And then finally the last page shows you what's called your profit and loss.